when it comes to promoting products, you might have noticed that I only promote one product, and that is Stake. So Stake is a platform that provides you fractional ownership into Dubai real estate market. And a lot of people ask me a question, okay, Yasin, is this safe? What's the guarantee? And what's the surety that this company is legit and they are not going to just take our money and run away? Well, first of all, Stake is a regulated company in Dubai under DFSA. DFSA stands for Dubai Financial Services Authority, and they are audited constantly by DFSA, so they have to meet a lot of strict regulations and requirements to be compliant under Dubai Financial Services Authority. So that's number one. Okay, so they are not just operating in unregulated exchanges like FTX and they can just collect money and then run away. So that's number one. And Dubai is one of those places where the laws are very strict. Okay, so that's number one. Number two, they are operating in a very unique environment. So basically, they built a very unique platform. Okay, it is similar to REITs, Real Estate Investment Trust, but it's very different. Okay, in REITs, they actually create a trust. Okay, they create a trust, a pool where investor buy the REITs as a share, as a stock from the stock exchange, and they basically use that pool of money to invest into different projects. Okay, and that money is very liquid. You can immediately sell those REIT stocks next day and take your money back. But in case of Stake, they're actually buying physical assets using your money. Okay, which means when you buy a stock into Stake platform, you're actually buying the ownership into a single property. By the way, there is a link in the description below. If you click on this link to sign up for Stake, you're going to get 200 dirhams free in your account as a referral credit by using my referral link. Okay, so when you start by signing up, you're going to get 200 dirhams in your wallet, and you can use that 200 dirhams plus your additional capital to invest into any property that is available to be funded. Okay, so when you buy the ownership, you actually are going to get a confirmation by getting a share certificate from the company that provides you the ownership of the shares in the company, and then you're going to get your name added into the title deed. That's how legit it is. You can use the title deed to verify your ownership by using Dubai Development Authority. That explains you that this is not some unregulated exchange working in the shadows. Okay, it's fully regulated. When you buy their stock, your money is going to get you the ownership into a property, and then you can basically get the appreciation as well as the rental income on monthly basis. Okay, so the next question I typically get is, okay, how do I take my money back? So there are two exit strategies. So typically they recommend to keep your money at least for 5 years, because when you're buying a physical real estate, you have to stay in the market for some decent time in order to get some decent returns. Okay, so the recommendation is you have to keep your money in a property for 5 years. Having said that, they provide you two exit strategies. Number one, the company will actually look for new offers in the market. As they get a decent offer in the next year or so, or after 2 years, they will give you the option to liquidate that property and give you the profits. So that's number one strategy. Second strategy is every year they announce two exit windows. One is in May and the next one is in November. Okay, in those exit windows, you as an investor have an option to opt in to basically sell your shares. Let's say you decided to sell your shares in that exit window. Your shares will be sold in the open market and somebody else will buy your share in the existing property. So the property will still remain as invested. You take your shares out, somebody will buy your shares from you, provided you have to have at least 1 year invested in the property. That's a requirement. You have to invest your money into the property at least for 1 year before you can use that exit window next year. I was reading the Q3 performance report, and according to that, they've been growing in double digits. Okay, they have around 85 million AEDs invested in the Dubai real estate market, and they are very strategic in terms of selecting and acquiring those properties, because they're buying those properties in the key areas in Dubai, areas they're looking into are well established, which means it's going to get decent rental growth. And number two, those areas are so established, so the appreciation is going to be very organic. They have been buying a lot of studio and one bedroom properties because those properties are very quick to sell, and the rental demand has always been very strong in those categories. So using those strategies, they have been acquiring nice properties, they have been rotating those properties, they generated good returns for their investors. And according to their Q3 report, total ROI is around 22%. On an annualized basis, it's 10.9% for a holding period of average 25 months. So those ROIs includes the appreciation and the rental yield as well. There's a good, decent return. Considering, you're not putting a lot of capital into it. This is a diversification strategy. You're not buying a $500,000 or $1 million worth of property. You're buying 10 grand, 20 grand, 30 grand worth of fractional ownership into Dubai real estate. And the other thing I want to mention here is the Dubai currency, AED, is hard pegged against USD. So you're literally basically investing into USD, which is going to give a lot of protection against Canadian or British pound currency depreciation. I'm in Canada. I always worry about Canadian dollar depreciation against USD, and we can see that the Canadian dollar is going south. And with all the economic challenges, I can see the Canadian dollar will struggle in the next coming years. So in order to protect my capital, I will definitely want to invest my capital into something that is going to be denominated in USD. And buying something in AED in Dubai, it's like you're buying in USD because that AED is hard pegged against USD. So there's no currency depreciation risk. So I have also invested into one of those properties. I have received the share certificate, and I'm waiting for the title deed certificate coming into my inbox. As soon as I get that, I'll share with you as well, so this is legit and I'm also the investor into those properties. So I don't want to promote something which I'm not investing into it. I'm also investing with my own hard-earned cash, and I'm sharing my experience with you. This is one of the best available options to diversify your income. And of course, I'm not going to put a lot of capital into it, but if I have 10 grand, 20 grand, 30 grand worth of extra capital, rather than keeping my capital into GIC, which is only yielding 3%, I would park my money into stake, which is going to get me at least on average between 8 to 10% return on annualized basis. And it's basically equivalent to investing into USD. I'm saving myself from the FX risk. Anyway, you let me know what you think about that. If you like this video, give me a thumbs up and subscribe. And if you have any questions, ask me in the comment section, and I'll see you in my next video. Take care.